All right, welcome back everybody to another stock market outlook video brought to you by DeepView. This is my daily driver for screening, charting, watchlist management, alerts, the works, and it's the best platform for growth stock traders and investors. So if you haven't yet checked it out, visit deepview.com. We've got a special offer, 2 months for $39. You can go ahead and try it out for yourself. We've got a lot of amazing and unique features. If you go over the dashboard, we've got performance charts, we've got bubble charts, which you can use to plot different indicators versus each other. Great for finding breakouts early. We've got heat maps, a ton of customizability options, data points, as well as everything you're looking for trading. So definitely check it out. The link is down below in the description. As always, today we're going to run through the market indexes. We're going to talk through the leading groups and themes, and then of course cover some key stocks. There's a lot to talk about this week, given the market action. As you can see, we distributed quite heavily this week, but there's some still, some hope, and there's some stocks holding up, some groups holding up, and we'll cover all of that today. So make sure you stick around until the end. If you do find this helpful, please go ahead and leave a like down below. And I'd really love to hear your thoughts on the market. So as we go through this, let me know, anything that stands out to you. Let me know some stocks that you're watching down below. I love to interact with you guys, so I'll try to respond to every single comment. So let me know your thoughts in the comments section. With that said, let's go ahead and dive right in. Starting with the NASDAQ 100 ETF, going into last week, this is where we kind of ended. On the 30th, we were forming this short-term range above the 21 EMA. The expectation, given this strong move up, was that we were going to continue higher after the short-term pullback and consolidation, but we got a negative expectation breaker here on this Monday, where we had a gap down and strong push below this range, below the 21 EMA. And this started kind of the end of this week. This distribution that we're seeing right here, both this bar and this bar, significant for sure. Large scale distribution, especially in the semiconductors, mega caps. We'll walk through, NVDA, Tesla later on in just a minute. But this day right here, this negative expectation breaker really set the tone for the week. The next 2 days, we had, these attempted move ups, fades into the end of the day. Again, a sign of weakness where we're forming the short-term range, but we're not able to push higher. And then we reconfirm to the downside here on this Friday. And now it's kind of up in the air about what happens. We're in a short-term down cycle. This 200-day moving average is a key level, potential area of support. That's where you can try to look for some signs of support where we're seeing upside reversals. We're seeing, lack of fall through to the downside. But this recent momentum with this trend now below the key moving averages, the expectation is lower. We may see a retest of these lows. That remains to be seen. But right now, short-term downside is expected, but we're a little bit short-term extended or oversold in the short term. I don't really like using that word because what can be oversold can get a lot worse, especially in corrections where risk happens fast. But because of this significant of a decline in just 4 days, the expectations or probabilities of a short-term bounce, maybe back into the declining moving averages, is increased. They're high above right now. But if we kind of tread water here, form a range for a few days, then we could get kind of a gap up or, push higher into the moving averages and then reconfirmation in the downside. These are just kind of possibilities playing out that you have to be aware of as a trader. It's good to have an expectation, because then if the market follows that, you've basically got a blueprint to play it. And if it doesn't follow what you're expecting, then that's new information and actually a good thing, because it kind of, leads to opportunities where volatility can lead to some great opportunities. Where here, we had the expectation that we were going higher. Instead, we saw large volatility to the downside. So that's one great example. Looking to the left in terms of other key levels to be aware of, we're right now at the top of this prior base. So I'll be interested to see if, next week we can form a range and actually find support here. This is one key level to watch, and we're actually already right there. We're below the anchored view out from the low, so that's out of the picture. But, if we retest this to the downside or to the upside, this could be an area of potential resistance as this curls down. As I mentioned, the 200-day is a key level that I'm watching, as well as these lows right here. Maybe we get a double bottom. Maybe this is just kind of the second wave down after this first wave. That remains to be seen. Again, we manage risk day by day. And if you're new to this, if you haven't been watching me for a while, What I really like to use in terms of my overall thoughts on the market and what the trend is I would basically eliminate all these other moving averages except the 21 EMA. This is kind of my guiding light, especially on the QQQ. If we're above a rising 21 EMA, that's probably a good time to be taking swing trades, growth stock trades. Breakouts are going to be working, especially early on in the cycle. But when we start declining below a declining 21 EMA and even retest it, that's a sign to be cautious, be defensive, move to cash early on in the short-term down cycle. And here we started a new upcycle, and then very quickly we turned back down, and now we're back below a declining 21 EMA. So if you're new to this and don't have a market cycle system just yet, I highly recommend just plotting the 21 EMA on your charts of the QQQ and just looking back in time and seeing how it gets you in earlier in the cycle. You can catch the meat of the trend, but when the trend changes, it protects you and protects most of your gains. You just kind of have to listen to that, one key moving average, and that will do you really good in terms of, not giving back too much, but also catching the meat of that uptrend. So the 21 EMA, super powerful. Just want to emphasize that if you've been watching, for a while, I've said this multiple times during previous corrections and uptrends. If we're above a rising 21 EMA, good time to be aggressive. If we're below declining 21 EMA, as we kind of reconfirmed down here through that moving average, that's when you want to be very defensive. Your stops are getting hit. You want to listen to that market feedback and kind of wait for, that next move up, because we will retake the 21 EMA at some point. And at that point could be a great low risk entry to get in and capture a potential trend just like this. We're in kind of a weak time seasonally when it comes to the year. We've of course got the election coming up in November. So that could be, there could be a lot of chop until then. Then we get some clarity afterwards and potentially have a nice end of year rally. This is just speculation, but we'll have to see what actually happens. Moving on, I also like to take a look at the small caps, how they're performing. Very similar action. We had the expectation of higher. We were trending nicely above the 21 EMA here. And then we didn't break out of the short-term stubby base. Instead, we reconfirmed to the downside, broke all these three lows at once, and treaded water for 2 days, formed a little bit of a shaky range, and then reconfirmed down here on Friday. So kind of the whole market together is moving, which is a sign to be, again, a lot more cautious. Bring up the mega caps, and let's hide the market navigator indicator here, and that just kind of is pointing out when we reclaim or lose the 21 EMA. Apple, still holding near that 21 EMA, but we did close below it. I don't like this fade here, and then a reconfirmation to the downside. Looks like a potential kind of bear flag type formation. EMA cross back into a declining 21 EMA, and now potentially reconfirming down. We'll see if we can hold in this area, but this is one of the stronger of the mega caps as of this moment. Microsoft, bringing that chart up. This is definitely weaker, below declining 21 EMA. We're in a stage 4 per Stan Weinstein. Looking at the daily chart here, Meta has been holding up a lot stronger, but definitely a very negative bar here. Again, is this kind of subtle clue here that we weren't able to break out of this stubby base and kind of break out into new highs. Instead, we failed to the downside, hung around the 21 EMA for a little bit, then reconfirmed down. So again, that's a big negative. There's a big reversal bar. So we'll see if we'll get some fall through to the downside here. Amazon, bringing up that chart, similar action, forming a handle after this move up, and now big negative reversal here on this Friday. Google, definitely very weak. You can see, in comparison, a lot weaker, taking out these lows, and again, just been trending below that 21 EMA for quite some time. Again, we had the breakout here. We try to push higher, then we lose the 21 EMA. This is your warning sign. If you're a trend follower, this is a sign to get out or, lighten up on your position. We move down, we rally back into a declining 21 EMA. This is the EMA cross back. That's your last chance to kind of get out. And then we reconfirm down, retest, reconfirm down, retest, reconfirm down again. Base and break to the downside. We'll see if we continue to fall through. And you can see the flip side. The 21 EMA is great for mega caps as well. We can start the strong uptrend right here above a rising 21 EMA. And then when we flip, that's a time to line out, especially to the long side, or if you're shorting, that's a time to press on the gas. NVIDIA, obviously a very key stock here. Let's bring that up. Here you can see if we go ahead and zoom in, we retook the 21 EMA, forming a handle here, negative expectation breaker, gap down, and then we're just kind of leaking below. There's some space to the 21 EMA, so I wouldn't be surprised at some point we get a retest that moving average and reconfirm down. But right now, this is just pretty weak, and we'll see if we test these lows or just kind of hold the top of this prior base. That's another key level to watch with NVIDIA. Lastly, we've got Tesla. This was acting pretty good, but then had a big reversal here on Friday. It was looking, one of the stronger of the mega caps, but, this low is definitely key, as well as, of course, this prior low right here. So the mega caps as well, kind of in a distribution phase, a lot of key reversals today. So in terms of liquidity, the big liquid leaders, things aren't looking too good. And again, it's a time to be a little bit defensive, given that we're below declining 21 EMA. Let's go ahead now and pivot over to the themes and kind of what's leading at the moment. You can see the strongest groups this week over the past 5 days over here. IGV kind of is one of the growth groups that I've been watching quickly. It doesn't look great on this chart, but there's definitely a few names sticking out to me. We'll take a look at those in just a minute. But overall, a lot of these are just kind of reversion plays. MSauce, Jets, retail's been strong. IHI, medical devices, healthcare has definitely been a strong group. And this is a really nice setup here with the performance charts in DeFi. You can really get a sense of, what's been acting strong and what hasn't. You can see blockchain really got hit hard, this past week. TNA as well, uranium, genomics, all these, oil, that's taking a big hit. So you kind of get a full sense of, where the rotation is flowing. And right now it just looks like pretty much distribution over the past 5 days. You can see the sectors as well. XLP has been holding up strong, which isn't a good sign for growth stocks. XLU as well, similar, although we're testing that 10 EMA now. So it's really nice to be able to see the performance charts and then just kind of tab through and take a look at the charts down here as well. Really easy to set up, and you can basically add whatever apps you want to the dashboard. If you're using DeepView, definitely check this out. You just kind of drag them in. There's no space on the dashboard. That's why I can't drag stuff in, but I've got a bunch of different setups kind of easily toggleable here up on in my dashboard module. But overall, performance charts pretty negative overall, and we'll just have to see what next week brings. Often when things look the worst, things will just kind of shape up out of nowhere. So even if you're very negative on this market in the short term, you have to be ready. You have to be watching for stocks that are showing relative strength, groups that are showing relative strength. And right now in the growth space, semis, which have been leading for the past year and a half, are definitely taking a big hit. But software and healthcare, those are two themes that I'm watching pretty closely. So let's actually go over to some key stocks. And actually starting with kind of the restaurant theme, fast food, CAVA has been standing out, holding above the 10 EMA when the market is well below. That's a key sign of relative strength. If you're scanning for stocks above the 21 EMA, 10 EMA, that's a great place to start this weekend in terms of looking for stocks that are showing relative strength. And the market took out the recent lows. This is holding above this prior low as well as the earnings gap low, and it's just looking pretty strong. We'll see if we can push through these highs as well as into this gap area and potentially U-turn. And this would definitely be a name I'm very focused on if the market really turns and we looks like we're going to restart an uptrend. And just going over to a weekly here, this is basically the first base here that it broke out, a little stubby base, another little stubby base, and now we're potentially forming another base here. And just trending above that 10-week moving average. This looks like a model book stock, volume increasing, everything's kind of coming together, really nice, annual growth expectations. And if we go back over to the daily, you can see the quarterly numbers, the growth is really strong, expected growth is super strong, solid sales growth, and just, the price strength is really what's drawing this to me. So definitely a name to have on your watch list or own if you haven't already, or look to own and start position once you can manage risk, once the market is right for your system. Also wanted to bring up PLTR, which just got included in this S&P 500. It's gapping up after hours, nice upside reversal today. And it was holding the 21 EMA as the market was clearly losing it. So showing clear relative strength. It's also in the software industry. A lot of these names have been acting super strong. Zeta did reverse today, but just has been in a super strong trend. GTLB, this has been a recent gap up, got rejected at the 200-day moving average, but GWRE, this is a name that just popped up on my scans today, broke out of a big base going back all the way to 2020. and is right near all-time highs and strong earnings gap on huge volume today. Not the best close, but given the market, that's to be expected. So name to watch to see if it can form out, a short-term range and potentially restart a new trend. And INTA as well, super strong action. This is kind of further from highs, but forming a big base. But could watch that 21 EMA and look for a U-turn right there, but very strong up the right-hand side here. And as a whole, software has been holding up pretty well when it comes to growth stocks. Let's run through some different names here as well. Let's go ahead and sort by absolute strength 1 month. Let's go ahead and do that again. Affirm, I was watching this key level right here. We did lose it. We'll see if we can reclaim it and start a U-turn. It is holding this low and the 10 EMA as of this moment. So we'll see what happens. Docs, this is one I've been watching very closely. It's been a little bit frustrating. It hasn't really done anything, but nice upside reversal off the anchor VWAP here, undercutting and reclaiming that key level as well as a low of this range, and a really good close given the market conditions. So watching for fall through these highs. ADMA is a biotech holding near the 21 EMA, not the best close, but for a swing trade, this is one to keep an eye on. CAVA we've taken a look at. GTLB we already did. TEM, this one to me, the correct buy point was here, and this was the trade. Now we're volatile and just kind of chopping down, and just kind of needs to retighten. You can see how the ranges are a lot bigger than they were back in here, and especially back in here when it really tightened and RMV went down to 0. So it just needs to reset, but one to watch. It's in the right space, and we'll just have to kind of see what happens with that name. GGAL, the South America stocks have been acting really strong, holding above this base, above the 10 EMA, as the market is clearly below it. This is definitely a very small name, so we'll see what happens there. Let's see here, PRCT, this upside reversal today, watching through these highs, forming a short-term range here. I was watching it in here. We kind of leaked below, so a little bit whippy in here, not trading super tight, but overall we'll take what we can get during these market conditions. Duolingo, definitely want to watch. I love the story, great growth numbers. I've used the app myself, definitely very addicting and very useful as well. And forming out this handle really nicely, holding above these lows as the market is undercutting recent lows. Uber is another name that looks pretty similar, although it did leak below here. But this is a name I'll continue to watch and see if we can finally push through around 73 here. Let's see if there's any other names I really wanted to focus on today. IoT just broke out. Looks pretty strong again in the software space. SMAR as well is acting well. And I believe Vive is another software name. Just had an earnings gap and now is kind of trading tight above this low. So just kind of keep an eye on the healthcare. Actually, there's a healthcare name, not a solar name. But we'll have to see kind of what happens here. Just keeping an eye out for relative strength. Let me know down below any stocks that you're watching personally. And remember that, even if they're showing RS, it doesn't mean you just buy them. You kind of have to wait for everything to line up. And when the market is right, that's when the wind is at your back. That's when the current is with you. And that's when you get those really nice clean trends that, make it easy to hold a stock. Right now, everything's very choppy. Something could break out and can give it all back the next day. So we're really waiting for that opportune moment, and we'll just have to wait and see when the QQQ decides to turn things around. And right now, we're in a short-term down cycle. So let me know your thoughts on the market down below. What do you think is going to happen? What are 1 and 2 stocks that you're watching? And if you did find this video helpful, please go ahead and leave a like down below. Subscribe if you're new to the channel. And definitely check out DeepView if you haven't yet. We've got a lot of great features coming that you do not want to miss. So definitely check it out and take advantage of that 2-month for $39. With that, thanks again for tuning in, and I'll see you guys for future videos. Take care.